Good morning, children. So, we have to start a question today. But before that, yesterday I have told you people to find a mistake in the video. So, it was technically, I told you people purchases since have a debit balance, correct. But it do have a debit balance not because of real account. Rather, it do have a debit balance because of nominal account. So there, I wanted you people to search it out. I got one answer correct, that is from Radha. Okay, sorry, Radhika. Okay, so now moving towards the question of today. We are given with a question that journalize the following transactions in the books of Ganesh and Company. That means Ganesh and Company. Matlab Ganesh is the proprietor of the business. The points are, first point we have given is purchased furniture worth rupees 20,000 and tools worth rupees 5,000. Now here as you can see that we have purchased two assets. So you can either pass two journal entries for this or compound journal entry. Now if we talk about compound journal entry, the case I already have explained, and those who have not written somehow, who have missed, can go through the videos from 20th April to 25th or 26th of April. There you will be finding the case of compound journal entry. Now what basically we have here is, we have purchased furniture and tools. So since furniture and tool both are real, real when coming into the business has to be debited. At the same time, since we have purchased assets, definitely cash is going out from the business, so that is again real, but real is going out. Now as we can see the rule, that rule says debit what comes in and credit what goes out. So the real that is coming into the business has to be debited, and the real that is going out from the business has to be credited. So we have past journal entries, furniture is coming into the business, furniture account debit. Tools coming into the business, tools account debit. For both, cash is going out from the business, so cash needs to be credited. So furniture account debit, tools account debit to cash account. Furniture got debited with 20,000, tools got debited with 5,000, and cash in total is going for 25,000. For this you can have passed single entry also. Let's see how we can pass it. So we can pass it. Since furniture is coming into the business, you could have written journal entry furniture account debit with 20,000 to cash account 20,000. At the same time, you getting tools, so you could have passed another journal entry, that is tools account debit 5,000 to cash account 5,000. Now here this is the case of compound journal entry because furniture and tools both got debited, and for both we have common credit, that is cash. That is why we have credited cash here all together for 20 plus 5, that comes to 25,000. And furniture and tools are got debited with 20,000 and 5,000. Moving towards the next point we have is open bank account with Dena Bank. Now do remember always that whatever the name of the bank does not make any difference. What we just have to remember is that we have opened account in bank. That means bank is a person, and to that person we have paid money. So bank being person, is the receiver. Bank being person is the receiver, and hence bank got debited because bank is the receiver. At the same time, when you deposited cash into the bank, that means cash being your real account is going out from the business. So here the rule applies, bank is a personal account and cash is a real account. So personal ka rule says debit the receiver. Since bank is the receiver, bank got debited. Cash because going out from the business, cash have got credited. So the journal entry technically here is bank account debit to cash account. Moving towards next, banked rupees 1 lakh. Now what is the meaning of banked? It means that we have deposited cash into bank. We have deposited cash into bank. Although in bracket it is given that cash sent to bank. But even if this wouldn't have been given to us, whenever the term banked is given, we simply have to understand that we have paid cash into the bank. Now you can see that cash is paid into the bank. That means cash being real is going out and it is going to bank. That means to a person. So as rule says, debit the receiver because bank is a personal account and person is receiver. So we have debited bank account. Cash being real account, cash is going out and hence cash got credited. So this is how we'll pass our journal entry. Moving towards the next. The next point is withdrawn from bank by Ganesh. Ganesh, if you remember the question, Ganesh is a proprietor for personal use. So if you would have remembered the very first lecture of ours where we have discussed that any amount withdrawn from business by businessman is called as drawing. But when it is withdrawn and called as drawing, when it is withdrawn for personal use. So here since Ganesh have withdrawn 10,000 from bank for personal use, this is considered as drawing. So drawing, definitely it is a debit because it is reverse to capital. It will reduce our capital. So drawing account debit. As you can see here, drawing account debit with 10,000. At the same time, he withdrew that amount from bank. So bank here becoming person and person is a giver because bank is giving money. So when bank is giving money, that means bank is the giver and bank got credited here. So drawings account debit to bank account. Moving towards the next. The next point we have is withdrawn from bank rupees 40,000. Now see very clearly that for the previous point and this point look like same but they are not the same. Because in the previous point we were told that withdrawn from bank by Ganesh for personal use. Personal use is considered as drawing, but here withdrawn from bank rupees 40,000. It simply means that we needed cash into business. So we drew cash from bank for business. Now cash coming into the business. When cash coming into the business, real coming into the business. So here you can see that since cash coming into the business, real coming into the business, cash got debited with 40,000. Bank is the giver and hence bank got credited with 40,000. Moving towards the next point. The next point is bought shares in Colgate Limited for rupees 50,000 and brokerage paid at the rate 2%. All payment is made by check. Now what is this basically? This is sometimes if we do have excess money and we want our money to be invested somewhere. So we have an option of buying certain companies' shares, debentures or bonds. Shares, debentures, bonds will explain you in later segments. So here what we have is, we have purchased shares. Now you can remember that these shares are considered as our investment because we have invested our money into some other company. So since we have invested our money into some other company, that investment is coming to us. Now since investment is coming to us, investment got debited. At the same time, payment is made by check. That means payment will be made by bank. So bank being giver has to be credited. But what should be the amount? Now if you remember, investment is an asset and we already have discussed that any amount paid in respect of acquisition of an asset is added to the cost of that asset. So here the investment was costing to rupees 50,000 and we are also paying brokerage of 2%, that comes to 1,000. So 50,000 का investment plus 1,000 का brokerage. The total amount that has to be paid to acquire that investment will be 50,000 plus 1,000, that comes to 51,000. So 51,000 should be the amount that we can see here. Investment account debit 51,000 to bank account 51,000. Moving towards the next point, which is purchased postage rupees 100. Now do remember, postage is generally, you might have seen some postcards, although I am very sure like you people may not have seen it because you hardly use it, but so many times if you're doing some paperwork, some official works nowadays also, you have to buy certain postage from the post office. So that is a kind of expenditure. So if you purchase that postage is an expenditure and hence it is a nominal account which says debit all expenses and losses. So here what we have is postage is an expenditure which got debited with rupees 100. At the same time, we have purchased, that means we have paid cash, and if we have paid cash, cash is going out from the business and real since going out from the business has to be credited. So journal entry is postage account debit to cash account. Next we have is paid to Ashok out of business funds for repair of Ganesh residential house rupees 4,000. Do understand it very clearly that we have paid the amount to Ashok. Now who is Ashok? Ashok can be any person who would have repaired Ganesh residential house. But now since Ganesh is a businessman and his house got repaired, for which payment is made from business, that means it's a drawing. So journal entry will be capital need to be reduced. And how can we reduce capital? By debiting drawing, because it's a drawing. So drawing got debited, so drawing account debit, and cash is going out from the business, and hence cash got credited. That is drawing account debit to cash account. 4,000, 4,000. The next point we have is paid electricity expenses 1800 and miscellaneous expenses 120. Now what is this? We have paid two expenses of business. So these are since expenses, so expenses need to be debited. Now since expenses need to be debited, we have passed a compound entry. Miscellaneous expenses got debited, electricity expenses got debited. So we have passed journal entry, both the expenses debit, that is electricity expenses debit 1800, miscellaneous expenses debit 120 to cash account. Since cash is going out from the business, all total, that is 1800 plus 120, that comes to 1920. Fine. Now we are left with the last 2 points, that is salaries unpaid. Now here what is happening is salaries unpaid and rent due. Salaries unpaid and rent due. So let's check it out. Now here, since salaries is unpaid, it simply means that salary is an expenditure which need to be paid, but we have not yet paid it. So simply expenditure, whether paid or not, will have a debit balance, because either it is paid or it need to be paid. Anyhow, it is an expense. And nominal account says debit all expenses and losses, and hence we have debited salaries account with rupees 15,000. So salary account got debited with 15,000. At the same time, salary here is not paid, rather it is to be paid. So it's an outstanding, which is a technically a personal account ka rule applies here, which says credit the giver or to any person whom we are liable to pay, that is our creditor. So here outstanding salaries got credited because of personal account ka rule. The next point we have is, we discussed rent due. Rent due also simply means that rent being an expense, it's a expense, so it has to be treated as nominal account, which says debit all expenses and losses. So rent account got debited with 3,000 because it is an expenditure. All expenses need to be debited. Now rent is not paid, rather it is outstanding. So here also, since rent is to be paid, it's a liability which got credited with rupees 3,000. So entry came to rent account debit to outstanding rent account. And the last point we have is interest on capital. Now look at the point that you are being told that capital is amounting to rupees 2 lakh, on which we have to charge 8% interest. That means 2 lakh into 8 upon 100, which comes to 16,000. Now this is 8% per annum, and we have to charge this interest from 1st April to 31st of March. That is for the whole year. So since interest need to be charged for the whole year, that is total 16,000. So here the entry will be 2 lakh into 8 upon 100, that comes to 16,000. So we'll post this journal entry for 16,000. thousand. Now interest on capital. Just imagine capital is that amount which is invested into business by businessman. Now the amount which is given to us by businessman, if we are going to pay interest on that, it's a loss. Since it's a loss, it need to be debited according to nominal account. So here interest on capital account got debited with rupees 16,000. It is to be paid to whom? To businessman. And for businessman's account, we have created capital account. So his capital will definitely increase because earlier his capital was 2 lakh. Now we'll also pay him 16,000 ka interest. So to increase that amount, since it was having a credit balance, it need to be increased by crediting that. So here capital got credited with the same amount. With this, we have completed this question. Now you have to solve the same question, but in the last point, consider that interest is to be paid till 31st December. So this need to be solved by you people and sent to me directly. Thank you. Stay home, stay safe, take care.